RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our free show, our public show. We're probably going to be a little bit light here today. Actually, we have a team meeting with people all over the world here scheduled here for this morning. So I don't think we're going to do an after party here. And the Stock Pickers Club, we took the night off last night. So not really a heck of a lot of new to talk about. So we'll probably just do like a quick market overview. Of course, most of the messages that I've been imparting of late, really nothing's changed here. It is good to see that we have a bit of sort of confirmation from the talking heads that they're thinking the same thing that we've been barking about for a while now. So that's good. Today itself, actually pretty light econs wise, Wednesday, May 29th here. A couple of days left in the month. But as you can see, really not a heck of a lot going on econ wise. We have one Fed speaker coming out here in about an hour and a half. It's near the end of the day though, so really nothing market moving. Interesting to see inflation numbers ticking back up, and we are seeing that in a number of markets. The inflation numbers, whether it be month over month, year over year, the comparisons are starting to actually tick back up, and also too. Everything gets bid up here into the spring. That's when most of the sort of economic activity is planned. And then, of course, we go ahead and build and do our thing through the summer. So I don't think it should surprise us to see that the econs are as strong as they're going to be the entire year right through this window here. Also hearing things like I think we saw yesterday, the housing numbers fairly firm. So it's just another year. I don't think that, in simple terms, we're back into that growth cycle. So the growth cycle, last growth cycle started in 1980, went all the way through to 2000, 81, 82. Some people argue March of 82 was the bottom. I wouldn't be surprised actually if they sort of mark the bottom of this cycle, following, I will sacrifice my life to save capitalism. And then, of course, the money printers all went crazy there and just hyperinflated our economy. And actually, a lot of the talk that I'm seeing out of sort of the media heads trying to explain what the heck is going on here. Of course, they're always coming after the fact and trying to explain what's happening in the face of today's econs, which I don't think is really constructive, but you can't blame them. That's what the media does. But it is interesting. We'll get to this story in a minute, but it is interesting that we're starting to see a little bit of sort of weakness in the sort of insane bubble that is the stock market right now. And I suppose to a certain degree, crypto there a month or two ago, although they have deflated a lot of the bubble here, which I suppose is healthy, and that's a good thing. But the amount of debt that is being sort of rammed down the market's throat here, the numbers are absolutely staggering. And I suppose that's exactly what they said probably in Weimar Germany days, where you had like $1 billion notes and stuff like that. I wouldn't be surprised if we head in that direction. Interesting too to see the darlings of the market, probably this generation's Nifty 50s. Interesting to see Microsoft actually, I think, is the biggest company now around. I guess it wasn't off this headline, but I did have an interesting little chart I was looking at earlier comparing Microsoft, NVIDIA, and Apple, I guess it was. the 1, 2, and 3. So Nvidia is really charging. And I suppose the easy way for you to see that is our little boxes here. Who's the biggest box on our screen here? That'll tell you sort of who's the biggest company around. So you can see Nvidia, Microsoft, and Apple are all vying for the big slot. But the interesting thing about that is that's actually not really a good way to invest. Um, had lots of stories. Buffett always likes to tell this story that if you come into the top of the market and you buy the biggest companies at whatever the market cycle is, next cycle, they're 9 times out of 10, they're gone and they're yesterday's story. So, I mean, Nvidia is an interesting story in that it really just came on the scene about, 5, 10 years ago. Uh, TRI CTO, Seord, of course, he wanted to buy this thing at $20 a share, $25 a share. And you see what it is now after a bunch of splits. Oh my goodness. So whatever the hell Seord wants to buy, I just default fine Seord, buy me 5 grand of that. I don't care. Just throw it on the pile. He's interested in this little gamify DeFi story. Got a whole bunch of people on the site all jazzed about it. Of course, he's in it, TRI's in it. I'm just like, you know what? Whatever paper's lying over afterward, if you can't find a home for it, I'll take it. If you like it, I like it. So anyway, interesting story. So, but I think what's happening here is that there's a lot of internals that are just problematic with this economy. And I think they're starting to just get to the point where they're weighing heavily. So interestingly enough, you're probably going to find that things like the darlings, like the big boys up here, they probably don't go through too bad of a go of it. But like we were even seeing yesterday, right? The market was coming off a big chunk, and the brick and mortar was just getting destroyed. But like Nvidia was up like 10% on earnings and stuff. So if you actually look at the in our dashboard, for instance, very good gauge as to sort of the overall market, the breadth of the market. This is the S&P 500. Fast is trending down smartly. In fact, actually, Fast has gotten to the point where it's actually oversold already. You can see how the slow is slowly being dragged down here. My hunch is that this market will set up a buy when these two cross back bullishly. And if we're lucky, that happens in an oversold condition. And we look down at our histogram and we see everything is heavily oversold in the both near and medium term. If you get that kind of signal, oh boy, look out, huge signal, right? In fact, we had that back there in the middle of April. And of course, the whole damn market launched higher S&Ps. And the country funds all heavily oversold, and it was a pretty good buy signal. So we didn't really get a run for the hills sell signal. You can kind of see the country funds did get a little bit overbought there. Nothing really dramatic, though. That was like more off of sort of the medium term, not really over the short term. So they're slowly trying to take the air out of the bubble. It's interesting that on the medium term, the country funds are still overbought. So what's it going to take for them to break? And probably whatever that message is, where they actually roll over. You can see that the U.S. stock market's rolled over. Interesting to see the currencies are all very, very weak versus the U.S. dollar. I actually like the look of the U.S. dollar here, but that in itself might be sort of a risk off kind of bet. But if I look at the US dollar, which I think is an interesting looking chart here, what letter of the alphabet do we have trying to form there? All right. So, a lot of the inflation data of late and the rhetoric out of the Fed is higher for longer. We have no desire whatsoever to cut interest rates. And the data I see, there's no justification whatsoever for thinking about lower interest rates. And if anything, this generation has to get back to the point of realizing that the risk-free rate should sit around 3.5%. The days of 0% short-term interest rates, those are long gone, and we won't see that again probably for our lifetimes. The talk, of course, is that the inflation numbers are just not calming down. And of course, this is my favorite gauge to tell me if the inflation problem is in check. And I hate to say it, folks, but you can see we just W'd out here, and W within W. And look how this indicator just launched itself higher here. I mean, we're within spitting distance of breaking out to new highs. And if that happens, of course, that's going to set up even bigger structural signals. So we were, there last week. We were kind of humming and hawing. Are we working our way down? The stock market was working its way up. People were feeling pretty good. And all of a sudden, bam, in your face. And of course, the scuttlebutt right now is everybody's, because like I showed you earlier, we don't really have any econs out here today. So the market's kind of drifting a bit. But where are we here? Do I have that page handy? I think that the market will get a pretty big sort of directional push come later on the week. Friday, you can see, oh boy, look at this, we got all this yucky inflation numbers down here. And of course, this is sort of the Fed's favorite indicator, the personal consumption expenditure and the core rate, right? Which basically is a stunningly manipulated data set. But that's the world that we live in. And of course, the banksters, they have their own agenda. You all know that. We are being great resetted. You will eat the bugs and you will like it. And there's not a damn thing you can do about it. Yeah, welcome to reality. I suppose that's half the reason why we like our Bitcoins. Bitcoin tastes great. The only issue here, though, is, and this is my concern about all of this, is, I mean, $60,000, $70,000 for one Bitcoin. I mean, that's a hell of a lot of money. And I actually might argue that if the stock market and these broader markets, if the US dollar, which is kind of a risk off bet, if this thing goes and W's out, and I don't think it's necessarily because the US is so awesome, it's the fact that Japan is basically cut its currency in half since I think it was like 2011 or something like that. That's all the headlines. And they're even talking about lowering interest rates in Europe because the economic situation is not too good. And look at China. Holy crap. China is just puking out. And of course, Australia is not doing so hot. And I did hear that the Japanese are threatening to intervene to support their currency, but at the same time, too, the Chinese don't like that at all. So put it all together. I mean, we're getting outright sell. I mean, the sells are coming in everywhere in currency land. So as a result, oh, look at that. I must have just gotten sold out. I think I had a little paper trade on the ES and it just must have just gotten busted out. Trading wise, I was fading this sell-off here, bought into Hoag's levels. Johnny Hoagland, if you all know me, you know who he is. And they didn't work this morning at all. No support in this market at all, which is interesting because we have one of these OPEC meetings coming up here, or OPEC Plus, or whatever the hell they want to call it. But I get the impression that it just looks like there's just waves of selling coming in here. And of course, as I said earlier, it's all basically based on these bonds. These bonds are not happy at all. I remember the other day when I was talking to you all, I don't know whether it was in the after party or the free broadcast, but I was pointing out that these bonds are not happy, and this is going to be reflected in the market. So, whether it be US dollar index itself pointing higher as a risk off proxy. So that should give us a bit of a pause, I suppose, in a weird sort of way. And I think it's a function of the US wants to basically maintain higher interest rates while the rest of the world's going to be melting down. I still think that there's a really nice short trade on this Canadian dollar here at some point down the road. But anyway, we'll see what happens. So is it the US dollar you want to blame today? is the US dollar. You want to blame the bond market? And thank you, sir. And the whole conversation around, geez, I always try to do these headlines and stuff. So like Sior does it so nicely, but I just do it terribly. Anyway, do we want to blame this on the bond market and the fact that the American government is coming out with just absolutely insane amounts of debt, and they're not finding any buyers. And that's the way these government bond auctions work. They have to sell the bonds, they don't have any choice. So, what ends up happening is bond prices themselves fall to the point, and the yields, of course, rise to the point where the market is interested. Do you blame internals of the market? So we've been talking for a while about how the Dow transports have completely disconnected with the industrials, and the transports continue to make new lows. So there ain't no reprieve out of this, and you can see how turns out. I mean, next time Beamish says that's a Dow theory sell signal, you better pay attention. You better pay attention. Take a screenshot of that, because we basically walked everybody through this trade. Literally, as this thing was breaking to new highs, we were like, nope, nope, wrong, wrong, wrong. And sure enough, baboosh. And really, I might argue, and this is the easiest thing for you out there. I mean, don't overthink this stuff. Just keep it as simple as possible. When are we going to see the breadth indicator basically bottom out? And geez, I'm terrible at these darn screens. All right, which one is it? Just give me a second to try and find it again. Over here. All right, there we are. When do we find that this thing bottoms out? And we've got both short and medium term washed out. If you see that, let's keep our eyes peeled for this. This is an incredibly awesome tool. It will save you a lot of headaches if all you do is just be patient and wait for the insanely stupid oversold condition. You can see we're starting in the short term to get oversoldness, but the medium term, God, we're not even anywhere close. And, I have cautioned all of you, and I suppose we'll finish off this broadcast with a quick chat about yield corn. Of course, actually, just a quick mention. Chris had said that this panda was starting to trend on social media. And I did notice when I pulled up the chart, although it's hard to see, but the 78.6, we are at 78.6. And of course, Brian, how much he loves his 78.6. I'm not really overly excited about this guy right here. Maybe if it puts in some sort of W or something, it might be worth taking a look at. But yeah, keep an eye on him on your radar screen. Probably going to find some support against that low there. That's sort of, Solana stuff. In fact, actually, there was one that I did buy here today. So I'll give you a nice little free treat. I post this, of course, in Brian's trading room on the site and in our little old lady room. This was an idea from Adam. Hopefully you can see all the W's and all that kind of fun stuff. So I was humming and hawing about participating in this thing. I didn't mind what I saw, and I really did want to get long off of these original double bottoms. So I went and pulled the trigger there today. So I picked up a little bit of that. Nanny nibbles, little old lady style. You know how that goes. And I've already got the sell half on a double order working. So I will just let it do its thing. So that's sort of Solana kind of talk. Actually, I look at like even just Solana itself. Maybe I'll just finish off with a quick boo at this. Kind of, just kind of like the stock market. Actually, they all kind of look the same. I'm not going to really call this thing ridiculously overbought, up into reload short zones, but I'm also not going to call this cheap. If anything, it almost looks like we're basically about middle of the range here. So I don't really have any expectations one way or the other out of something like Solana. I think this thing just needs to go sideways for a while. And the corn, I missed my fun little, let's see, where can I pull this one up? Over here. There we are. This actually, I even did this as a tweet out maybe a week or two ago. I think we all can really learn from this. Super, super good working example. When the Fed meets, it looks like that's like panic dump, sell the rumor kind of idea. Then they're, I think the fear is that they're actually going to raise interest rates. And keep in mind, the Fed minutes that came out the other day, there are people in that meeting that actually would like to raise rates. And there's some inflation data that actually justifies raising rates. Then the FOMC minutes actually come out. They get released about 3 weeks, I think it is, something like that, following the Fed meeting. And that's sort of the almost like sell the rumor, buy the news, and then buy the rumor. And then the actual Fed minutes come out. What did they actually say at the meeting? And sell the news. And we just keep doing this back and forth, back and forth. So, last FOMC meeting, sell the rumor, buy the news, into that Fed minutes release, buy the rumor. It turns out they all really hate us and they want to crank rates to the moon. Sell the news. So whether it be something like Bitcoin, which I think is actually more in tune with these Fed cycles than something like the stock market, which, you have like Nvidia come out with some crazy ass earnings number and everything gets all skewed. But for all intents and purposes, you can kind of see the same image here. Fed meeting was over here, FUMC. Then the Fed minutes released over here. So, buy the rumor. Do we sell the news? We're at an interesting juncture here. Does this go and actually double top out and start to break? I think if anything, if we do get the break, we're probably going to come up against this 30 SMA on the daily charts and probably check this original breakout, fill in some of these gaps, that kind of idea. So I don't really think it's like the end of the world, but at the same time too, we all know what the Beamish is expecting through the month of June. June's usually a tough month. So it wouldn't surprise me one bit to see some sort of swing like that. And really, this isn't breaking down. We might find that actually this creates like a big AB equals CD, boom, 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 and we're actually up here by the middle to the end of the summer. I could easily see that. So I think it's just that the breadth needed cleaning up, and actually it is going through the process of cleaning up. The Dow theory was an absolute mess. Still don't have a bottom in the transports yet. So I don't think you're getting any help out of there. The US dollar is fairly firm because inflation and our inflation deflation gauge is ticking back up to the inflation side. You can see the yields on the 10-year. I wouldn't be surprised if we hear that mortgage rates are ticking back up, all that kind of fun talk. So, there's problems. And, aren't I supposed to add insult to injury? We've got the volatility index is finally, sort of turned back up here in earnest. There is the S&P 500. So, where does this thing actually go and M out? Once the volatility index does M out, then I think, we're back to the bull side. So, if anything, that's probably a really good image for you to us to leave off on. And the market's not very happy. And whether it be something like Bitcoin or, even the total market cap, I'm warning people on the site, if this goes and M's out, we're probably in for a couple weeks of pretty tough sledding. Really, I might even argue that just you want to keep it simple for the entire broader market. I guess that total crypto, you can see the same similar M there in the stock market. If that M's out, we're probably in for a couple weeks of kind of tough sledding here. So there's your backdrop, slow and steady. I don't think there's really a big hurry to go like pound the table. You got to buy this now. You got to buy it. Got to buy it. I think if anything, this is a kind of environment where you want to build your shopping list. That's all this kind of talk. You want to just, where are the W's coming in? And can I just go and slowly start accumulating names? In fact, I don't even really see any W's on here. I think we're getting into some attractive trade location, but it's still not quite there yet. I think, in fact, actually, I even put out a tweet. There's one name, of course, it's one of Seward's awesome names, so that's always good to hear. But I do like the look of this little guy in here. But you can see it's already leaving the station. So had you bought this W and you're risking against these lows, great. But looks like you're kind of you missed the bus here. It's already starting to take off for a trade. So other than that, I'm not seeing a whole heck of a lot I really want to do here. But what I said there a moment ago, if you can think, 6 months, a year down the road, probably we got to get through this US election. That's going to be a huge uncertainty over the next 6 months. But once we get on the other side of that, 2025 should be one hell of an up year. So, slow and steady wins the race. Take the opportunity now to accumulate these names that you like. These are our fun little old lady kind of names. And I don't think it's a good idea to chase. And of course, if you're over in Solana land, as I showed you there just a minute ago, and we'll leave off the broadcast on that, something like Solana and kind of like the Ethereum and the Bitcoin and stuff, I don't see anything compelling to be done here. I know that looks like a mess, so it's probably hard to even make head or tail out of that. But, stuff like this, where's our fun little I think I could, somebody had said earlier, oh, yeah, you should talk about this Panda. I don't even really like the look of this. I don't like the fact that this thing broke to new lows and closed below there. But as I showed you earlier, there are some names that I'm actually willing to start stepping in and doing a little bit of nibbling on. And this Doman here, this was an idea by one of our site members. And so he likes it. I like the fact that it's got W's working. It does. It's not like pound the table. Oh my God, this thing's going straight up. It's more just like, I'm building my shopping list. This guy's banging around the bottom end of the range. Is there realistic to look for a pop back up top here when the market gets happy again? I think so. And of course, I should be able to get doubles off and stuff like that and build free positions going forward. So that's the kind of mindset that I'm in. And I really don't have any expectations over this window here. This next month, if anything, you're probably going to hear a lot of names that Brian's just slowly accumulating away down at the bottom end of the range here. So, okay, there's your summary for today. It's about 20 minutes, half hour. I think we're going to head on over and do a marketing team meeting, try and figure out if we can laser beam focus our message here over the next 6-8 months for TRI. So I don't think we're going to do an after party meeting here today. No big deal. We didn't have a stock pickers club meeting last night because you kind of saw my comments about the stock market. I'm not overly impressed with what I'm seeing out there right now. So slow and steady wins the race. If you can accumulate these names at the bottom end of the range, this happens to be a crypto. If you know it, great. If you don't, it's 6 to 1, half dozen the other, whether you buy it. I suppose as a nice treat, I can show you a stock I'm buying. Certainly not buying that. But hopefully when you see this, you kind of see the same image. So I've shown you this silver name. It's basically the same logic as the crypto names. I love to buy cheap discounted stock. So should it surprise anybody that Beamish is coming in here and accumulating this guy? I don't think so. All right. Do your own due diligence. I won't make a difference to me whether you buy or sell anything that I talk about. I'm showing you what I'm actually buying in the market. So take the information for what it's worth. PMA for the win. Slow and steady wins the race. Have yourselves a great rest of your day. All the best. The only thing left to say to you is bye for now.